one.
Yeah.
Right, one more before we take a break. That's Giant Manufacturing. Now we're going to talk here about a Taiwanese-based manufacturer of bicycles and related accessories. Big company.
Yeah.
Listed on the market in Taiwan. It has a market capitalization of 58.14 billion Taiwanese dollars, which I think if you divide that back into US dollars is going to get you down to a number somewhere around about 2 or 3 billion
about
US
2
dollars.
billion, about 2 billion.
Yeah, okay, that sounds about right.
Yeah.
So again, smaller, and I think the chart will reveal that it hasn't really shot the lights out. It's getting affected a little bit by this commodification business. 22.73 price earnings ratio, dividend yield though still positive 3.23%. What have I missed with this one?
Biggest bike manufacturer in the world, and unfortunately from all the trends we've spoken about, the most exposed as a result. It's really taken a beating in its biggest markets, which is the US on the one hand and China on the other.
Yeah.
US partly because of competition, partly because of the retailers, the sports retailers being in trouble. Two of their big retailers actually went bankrupt, so that diminishes their market. And you're seeing a move, another trend that we haven't spoke about is direct manufacture to consumer sales.
Via internet websites.
Exactly. That's the story of retail. And they really betwixt and between, because they can't really follow that.
They don't want to cannibalize
There we
their
go.
own relationships.
And so you've got a very interesting bike brand called Canyon, which followed that approach from the beginning, and they've just online only, direct to the consumer. So better value, 25% for the same product, 25% cheaper.
Yeah.
So they really are in a tight spot where they're almost getting squeezed from all areas.
And Giant would have been one of those core Taiwanese and Chinese-based businesses that was targeting a broad-based consumer, lower-end bicycle for the Chinese market, and now getting a little bit chopped up by the bike-sharing type situation.
Very much so, yeah.
Okay, share chart-wise, did we look at that yet? I'm not sure. You can see there, that's a reflection of just how much pain we've been taking. So that's at an all-time high of around 300 Taiwanese dollars at the end of 2014, 2015, falling currently to about 155. So that's a lot of pain being sucked up there. And what I've noticed about these Chinese and Taiwanese companies is that when margins get pressured, nothing happens. When markets get competitive, it doesn't get any better.
No.
It just stays that way. And they have to brutally address their costs and try and chop and change. It's not an easy market at all.
Very difficult. You've got these deep pools of capital in China which seem to be limitless. And a lot of it's debt provided by the government.
So companies will come after you. Okay, so we're going to have to go not hot on Giant, I suppose.
Not hot.
Okay, good. Not